everyone, and welcome to today's webinar, Gold and Silver 101. I'm Machi Block, Senior Director at American Hartford Gold. We're the nation's largest precious metals dealer, and for over a decade, we've been helping countless numbers of Americans like you and I to sort through the noise in the market and to protect their retirement savings with physical, tangible gold and silver. And today we're here to talk about gold, silver, the economy, and how you can invest in precious metals specifically inside of a qualified retirement account. And so we'll break down the economic landscape, how you can invest into precious metals, why you should, and we'll help you get to know our company and why American Hartford Gold is, of course, the right choice for you as well. So take a minute, get settled in. We're going to let a few more people join the stream. And while we wait, write a comment. Let me know where you're watching from and whether or not you've bought gold before or if this is your first time. And I'd also love to hear whether or not you've joined us on a previous webinar. And also let me know what brings you here today. Is there something specific that you're seeing in the economy that has you looking at gold and silver right now? Is there something that you're joining us for that you're hoping to learn? All of that helps us get a good sense of why you're here, how we can tailor these webinars going forward, and making sure that we're getting you relevant information. So James, hi. Jim, Janice, hello everyone. Nice to have everybody on the stream with us today. And again, before we get into the heart of today's webinar, I am Machi Block, Senior Director at American Hartford Gold. My job here is to help people like you and like me to gain an understanding of and to invest into gold and silver precious metals. And today I'm going to be really excited to take you through the essentials of owning precious metals in a retirement account and really why they're such a crucial cornerstone of any well-built portfolio, especially in this current economy where there tends to be so many unknowns and concerns that are floating around out there. And no doubt that's why you're joining us today. In our opinion, it's more important now than ever to understand how gold and silver can serve as your financial safety net. And so really, whether you're a seasoned investor, you've been buying for years, or you're just beginning your journey, our goal today is to provide you with clear, actionable insights on how you can secure your investments with gold and silver, and then, of course, why you should as well. Now, at any point in time during this webinar, if you want to chat directly with our account executives, call the number that you see on the screen and the message board. It's 866-607-2447, and you can have a more in-depth, specific conversation with one of our account executives. They're all on standby, ready to take your call, ready to help you. And you can also leave any questions that you have on the message board. I do have moderators that are helping send me those questions periodically. We'll create a little bit of space to go through all that for you as well. Now, if you have a very specific question, one of our moderators might pull you into a side chat just to answer that question more one-on-one. And then keep in mind that anything that you write is helpful for us to know how to tailor this in the future. So if you do have a question, even if you think I'm going to get to it, just go ahead and ask it, even if you think I'm going to cover it. And then the last piece of this is not financial advice. It's pretty important that I say that. I don't know you or your specific situation. I'm just here to guide you and kind of give you an idea of what we're seeing and how this process works and why our clients feel really comfortable investing into physical gold and silver and getting a hedge in this current economy and climate. So it's good to have you all. We've got a few more people joining us here. Fabio, Lori from Illinois, Portia from Fort Worth, Texas. James, I've bought gold and silver before. That's great. Dan from New York. Doug from Wisconsin. Janice from Orlando, first time venturing into investing in precious metals. We're retired and looking to diversify our investments. Very new to investing. That's fantastic. That's exactly what we're here to help you understand. So we really appreciate you being on the webinar with us. Daniel and Truitt, stacker and have precious metals IRA, and I'm looking at different opportunities that may be available. Perfect. Maybe modifying your existing setup. So we'll talk about all that, and it's really great to have all of you joining us today. Now, primarily today, I'm going to focus on how to open up a gold IRA, why you should, and the ins and outs of that. But I am going to go through a quick summary of the economy. I think it's always important that we understand why we're investing into gold and silver. I'm sure that you have a sense of that. That's why you're joining us. But it's nice to canvas a little bit of that before we get into the ins and outs of how you can actually put physical, tangible gold and silver into a retirement account. Now, if we zoom out on this, we get into precious metals when there's inflation concerns, devaluation of the dollar, stock market or traditional investment risks, recession fears, and then unknowns in the economy, the market, the world, right? So If we look at it, gold and silver started this year with a bang. Both were reaching new all-time highs throughout January, March. They've since consolidated a bit. We've seen a pullback, but we're expecting their next leg up is very soon, and I'm going to talk about that more shortly. Why did they pull back? Why are they consolidating right now? And where are they headed? But if we zoom out on the world, geopolitics are an absolute mess, right? We have war with Iran that's broken out, the Russia-Ukraine war that's still ongoing, war and conflict in the Middle East. Inflation is back on the rise here at home and abroad. It's actually expected to break about 5% this year. And then government debt has nearly reached $40 trillion. And I just want to let that number sit for a second. $40 trillion of government debt. That number is astronomical. And then we have the Trump administration that's actively trying to devalue the dollar. They want to convert America into a manufacturing and a producing nation. Now, the sentiment behind that is good, but in that process, you have to have a weaker dollar in order to be able to manufacture, produce, export, and get other countries to buy our goods. And so the dollar hit a 4-year low, and they asked Trump about this back in March, and he said, that's terrific. That's exactly what we're going for here. You're going to see more of that as we go forward. We see that Trump is actively trying to get interest rates to come down to print and stimulate the economy, which weakens our dollar. But of course, there's more dollars floating around in the system. Now, Marco Rubio came out about a month ago, and China and Brazil had just struck a deal that they're going to be trading outside of the US dollar. We've traditionally had every country in the world trading in US dollars for cross-border payments, but now we've got China and Brazil that are trading outside of it. And Marco Rubio didn't cut any corners. He said that in the next 5 years, we won't have the same dollar. We will not have the positioning to be able to sanction countries or control the world the way that we do. We're moving into this multipolar world where the entire world is tending to pull away from the US dollar as the world reserve currency. So this is brand new for us, and it's very important and impactful for our investments and our accounts. Now, the stock market right now is also the most overvalued it's been in American history by every single measure that economists look at. The average stock is trading 535% greater than its book value. In 1929, before the Great Depression, that was 400%. We're more overvalued today with our stock market than the Great Depression. Now, the Warren Buffett indicator, it's the total stock market value to the total GDP of the country. We're sitting at 250% right now. Anything over 120% is in the danger zone. And that's why Warren Buffett is sitting on about 50% cash right now. It's the largest stockpile of cash that he has ever had. He can't find anything at a value that's worth buying. So at the same time, Americans are more invested in the stock market than ever before. And the total number of value per net worth of a household is greater exposed to the stock market today than we've ever seen. And so you think about the risk that starts to get built into that when the stock market is up so high, when it's so overvalued and Americans are so invested into it, that's a recipe for disaster. Now, the market's doing great, but we have to ask for how long and really at what cost if that changes. There's really about 5 to 10 names that are propping up the entire stock market right now, and they're all built around AI. They're all investing into one another. So there's this circular money that's going around, but there's no revenue generation. AI has not figured out a way to generate revenue yet. So OpenAI, one of the biggest obviously, is going to lose $140 billion before they can turn a single dollar profit. And again, all of these AI companies that are supposed to save the economy and prop up the market, what they're going to do is wipe out millions of jobs. And so that sounds a lot more like a risk in a recession than it does progress. And then we have this week's jobs report that's already coming out showing that, yeah, there is some employment happening, but there's still a lot of cracks in the overall economy and overall employment right now. And then if AI is killing more of those jobs, again, what does that future look like? This is probably the most risk-on time that we've ever seen in American history. And so if there's anything, there's unknowns right now. And the stock market hates unknowns. And so there are the perfect conditions for investors to get into gold and silver. And it's really why we see investors flocking to safety with precious metals to get a hedge against all these things that I just listed off. Now, a large part of that is getting a hedge in your retirement account. Most of our clients have the vast majority of their net worth and their life savings tied up in old employer plans like 401ks or IRAs, and they're looking to get some risk off the table. And I'm hoping that's why you're here as well. That's what brought you to the table today. But that's what we're going to talk about, is getting that diversification with precious metals inside of your retirement account. You can also do it as a cash purchase. I can talk about that at the end. But again, the focus today is really that retirement account, so you get a good ins and outs of how that works. Now, last year, gold was up 64%. Silver was up 142%. We started out this year very strong, but with the turmoil in the markets and the war with Iran, we've seen a bit of a pullback and consolidation, which is actually giving us a very great breadth in the market to enter in. So if you're thinking about this, is actually a great time for you to make a move into precious metals. If you've been sidelined and you're wondering about gold and silver, this is the time to make that move. Now, gold and silver pulled back from about 5,500 to around 4,500, roughly, and silver from about $122 an ounce to the mid-70s right now. That puts us in the perfect position for entry, and both metals seem to have found a bottom recently over the last month, and now they're beginning to rise again. So that turnaround has happened, that shift is there, and the market is starting to go back up. And let me just explain the pullback. Both metals were basically going straight up at the start of the year and the end of last year. Just incredible growth. Again, 140% on silver, 60% on gold. I mean, that's tremendous. And you always need a bit of a consolidation period and a pullback for a healthy market. 2 steps forward, 1 step back, and then consolidation before moving back up. And so that was naturally going to happen anyways. But then the war in Iran broke out. Oil and gas prices have spiked. Inflation is going back up. And the stock market not only got incredibly volatile, but we had these major Wall Street institutions that needed to cover their margin calls. And they do that by liquidating their most liquid assets, which are typically paper, gold, and silver. So that started a temporary sell-off. And then with the inflation going back up, the Fed couldn't cut interest rates. Gold and silver love a low interest rate environment. And so on that sentiment alone, we saw that gold and silver started to sell off a bit. It was just a good opportunity to even out the market. Even though nothing had materially or fundamentally changed behind the scenes, we just had to go through that period. So that said, at some point, the war will be over and conditions will resume. And in addition to this, Fed Chair Warsh just got confirmed. This is Trump's guy, that Trump is pushing to get interest rates cut lower and lower. And so we're expecting that interest rates are going to be cut in June. Now, that's huge growth for gold and silver as soon as that happens. So again, we're on this springboard right now. We're just loaded up for that next catalyst to push gold and silver significantly higher. We have UBS, Goldman Sachs, Citigroup, Bank of America, and JP Morgan Chase talking about gold ending the year around $7,000 an ounce. That's about 40% up from here. And then silver anywhere from $150 on the low end to $309 an ounce. That's coming from Bank of America on the higher end just at the end of this year. That's about 200 to 400% growth from where we're at today. So the outlook, again, is tremendous. You may not be early to gold and silver. We've been in this bull run for a couple of years, but you're certainly not late. In fact, you're right on time. And so if you're considering getting into gold and silver, really this would be a great time to do that. And so we'll talk about how to invest into gold and silver inside of an IRA. And again, I just want to remind you that you can call us now at 866-607-2447. If any of what I've just gone through is resonating with you, we can discuss all of that in more detail with you, as well as your personal situation, and get right to the heart of things with you. We do have our account executives on standby waiting to help. And so feel free to just call us directly now, get right into it, and we can get you a replay of the webinar so you can catch the rest of it. But the how here, right? So how do we invest into gold and silver? You can put physical, tangible gold and silver into a retirement account. A lot of people think that it's just paper assets. If you're going to buy gold and silver in your account, it's got to be on the stock market. That's not true. This physical, tangible gold and silver right here can go inside of your retirement account. And I can't tell you the peace of mind that our clients feel by knowing that they have real money and real wealth inside of their account, and it's not just paper assets. But what type of accounts are eligible? If you have an employer-sponsored plan, whether that be a 401k, a 403b, a 457, a pension, a TSP, those are all movable. And IRAs, again, traditional and Roth IRAs, that's movable as well. Now, if your employer plan is current, if you're currently employed and you're actively contributing to your 401k or 457 or whatever you have, you do have to be over 59 and a half for that to be able to move out from your company and roll over into a self-directed IRA that we can set up for you to put gold and silver in there. Or if you've ever previously worked at another company and rolled that employer plan into your current plan, those funds should be eligible to move into gold and silver as well. So you either have to be over 59 and a half, or you have to have rolled funds at some point from another employer to your current account. Otherwise, there's usually a bit of restriction from your company allowing your funds to move. So those are the two stipulations. Now, if you have a previous employer 401k or 457 or employer plan, that can be moved at any time, regardless of your age. And then any IRA that you have, a traditional, a Roth, a SEP, a simple, that's able to be moved over at any age. So no restrictions there. And this is all tax-free and penalty-free. So these funds can roll directly from your employer plan or your IRA over into a Gold IRA, tax-free and penalty-free, because we're keeping them inside of a retirement structure for you. So nothing changes. It's all tax-free to do this. Very simple and no penalties. Now, what we do is we open up what's called a self-directed IRA. Now, this is the type of account that allows you to hold on to physical, tangible gold and silver inside of your retirement account. So we will do all the heavy lifting for you on that. It's a quick application on our side. It takes 5 minutes. We just, get on the phone with you, get a little bit of personal information, and open up that self-directed IRA. And this account, again, allows you to hold on to real gold and silver inside of that account, not just stocks, bonds, equities, and the dollar like you're currently invested into in your account. You actually own the assets you're investing in. It's not paper. It's not ones and zeros on a computer screen like stocks. You have physical, tangible gold and silver as an investment inside of your IRA that you personally own and you can access at any time. Now, the way that works again, so if you have one of these accounts and you meet the age gap, or it's a previous employer account, or it's an IRA, you call us up. We'll get on the phone with you. We'll go through a full consultation, but we'll get an application started at a self-directed IRA company that we personally work with. It's the oldest and largest self-directed IRA firm in the US. Very long-standing, great company to work with there. Takes us about 5 minutes just to go through some details with you. We'll send that application over to you via DocuSign for a quick signature. And then we have an entire back office dedicated to helping you roll the funds over. So we'll do a custodial call to your current custodian where those funds are at. We'll help you liquidate any part or any amount of that account that you want to move into precious metals. You can do a partial or a full transfer. And then we'll get the transfer form submitted. We'll keep our thumb on the process the entire time until your account funds into that self-directed IRA. Now, once that account is opened up, we go through a full consultation with you. We help you select the metals that you want. We build out a portfolio, and then we're going to ship that gold and silver to a private depository. Now, this is a third-party vault. It's outside of the banking system. You own that gold and silver. You can access it, again, any time that you want to or need to, but it does have to be stored inside that depository safely and securely while it's in the retirement structure. But if you ever want to get this out of the account and take possession of it, you can do that. Again, it's going to work just like a normal retirement account. After 59 and a half, you can take distributions at any time without penalty. All they're going to do is tax you coming out just like they would if you were pulling out from a current account, a retirement account, or an IRA, right? But the nice thing is there is some tax benefits by owning physical, tangible gold and silver inside of a retirement account. I'm going to leave that for you to actually contact our company because it's a little bit more in-depth to get into on this webinar. But if you have interest on moving precious metals into your retirement account and having the tax benefit, again, I would just encourage you to call us 866-607-2447, and you can talk about the specifics of how this can save you on taxes when you're pulling physical gold out of your account and what that looks like. But it's really a simple process. It's you knowing that you want to move some of your retirement account into precious metals. You call us up. We'll go through that consultation with you, figure out how much you want to move. We'll get that application done. We'll schedule a custodial call, submit transfer forms. We keep our thumb on it until the account funds, and then we build out your portfolio for you. So it's very, very straightforward. It takes roughly a week to get done. But here's the great thing about working with American Hartford Gold is we are the nation's largest precious metals dealer. We're the only firm in the industry backed by private equity. Now, where that's interesting and helpful to you is while you're waiting for your custodian to transfer funds over, if all the conditions are met, we can sometimes pre-fund the account for you and actually purchase metals ahead of time if we think that the market is going up, and that gets you into gold and silver a lot quicker. You're really not going to find other companies that are willing to do that for you and put themselves out on that limb, but because we have the funding, we can do that to no problem, and it's an advantage for you to be able to get into the market quicker without having to wait a week or so while those funds are moving over. So it's really that simple, and if you're ready to get started with either of those, call us at 866-607-2447. Again, if you have an old IRA, whether that be a Roth or a traditional, you can move that in. And then if you have an employer-sponsored plan currently and you're over 59 and a half, or it's from a previous employer, all of that is movable. And if you have any questions on that, or you're just wondering whether or not you can do it, again, call us. We'll get into your situation. We'll check for you. We'll make sure that it's all good to go. But no taxes and no penalties. Now, if you have any questions on that, this would be a great time to leave them in the message board, and we can kind of circle back around and make sure that I filled in all those details for you. Now, again, why American Hartford Gold? We're the nation's largest precious metals dealer, right? We've sold over $4 billion with gold and silver just in the last couple of years. We've been in business for over a decade. I'd encourage you all to visit our About Us page and see our welcome video. You can see our president, our CEO, all of our department heads. You can really get a good glimpse inside of our company. You can see our office, our shipping department, and know the company that you're partnering with. No other company is putting themselves out there like that. We really want you to be comfortable making this move and know that you're in good hands. We've been an Inc. 5000 award or Inc. 500 award winner for the last 5 years in a row. Full service team dedicated to making this a smooth and easy transition for you, both into gold and silver and out of gold and silver. We have a buyback commitment to our clients with 0 fees. We have an A+ rating with the Better Business Bureau, Consumer Affairs, Trustpilot, Google. Again, thousands of positive reviews out there. You're just not going to find a better company to work with than American Hartford Gold. And again, we will be here from start to finish, helping you understand the process, helping you select your metals, helping you know when it's time to get in and out based on your situation. And at the end of the day, one of the most important things is not just buying the gold and silver. That's obviously, we want to get that into your account, but you have to think about the exit. So when it's time for you to sell gold and silver, is the company that you're working with going to be there to buy back your metals? And the reality of it is, with American Hartford Gold, again, being the only precious metals dealer in the industry that's backed by private equity, we can liquidate millions of dollars for our clients day after day after day, and we have with no issues. So we have that buyback commitment to our clients, again, to make this as simple and as easy as possible for you to get out of the dollar, into gold and silver, and of course, back into the dollar as soon as you're ready. Now, if all that's sounding interesting, we have lots of information that we can send out to you. We also have a great guide that our marketing department has put together. So if you want some physical information, just understanding our company and the process, we can always get one of these out to you. There's great videos and resources on our website. But I'm hoping that you're getting a good sense of things just by being here on the webinar. And I think it's probably pertinent to just touch on the cash side. I know that you're here for the IRA, but if you have cash outside of retirement accounts, whether that be brokerage accounts or sitting in a bank account, and you want to get funds over to purchase metals outside of retirement, you can do that as well. And that's really simple. It's just a wire transfer or a check over to American Hartford Gold. We get those funds in, we go through a full consultation, we help you select the metals that you want, build out your portfolio, and then we ship that gold and silver right to your door via FedEx. It's on an unmarked package. It's fully insured, backed by Lloyd's of London, up until the point that you sign for it and take possession. And so there's no liability for us to ship that. It's just going to be a very simple, straightforward process. If you don't feel comfortable having that gold and silver at home, we could open up a private depository for you as well, just like the retirement side. It's not going to be in a retirement account, but it can be stored for you. We have that opportunity. Very simple and easy. And worth mentioning, in the retirement account, while your metals are stored at the private depository, they are fully insured, up to $1 billion per account holder. So it's one of the safest things you can do. Not only are precious metals one of the safest investments you can get into, but having them stored at a private depository gives you that peace of mind that they're secure, they're safe, they're fully insured, there's no issues there. So I hope that gives you a pretty good sense. Now, a couple of questions. Is it too late to invest into gold and silver? You know, gold and silver have been at these new all-time highs this year. But again, we've seen them pull back and consolidate. And if you zoom out on where the market's headed, it still looks like we're in the second or third inning of about a 9-inning game. The dollar is just getting absolutely crushed. We had the worst year in 52 years with the US dollar. As the government continues to print and spend and that debt goes up, gold and silver will continue to grow. And you won't really find a single voice out there in the investment bank world or analysts or economists that aren't saying that gold and silver are going dramatically higher. So you're not too late to get into this at all. In fact, I would say that this is the perfect time if you've missed the boat up until this point. Now, would you recommend gold or silver or both? That's a great way to look at this. Silver, we tend to lean on for growth. It's going to be a little bit more volatile than gold, but you get a lot more performance out of it typically. Gold is that tried and true, stable, consistent, steady investment that you can get into that's going to give you that peace of mind. And so we always say gold for stability and preservation, silver for growth. Now, the market conditions can kind of change week to week, month to month. So we'll always go through a full consultation with you and help you figure out what assets are best for where you're at, what your investment objectives are, your time horizon, and your liquidity needs. But you can put both gold and silver and platinum and palladium into a retirement account. And we do have IRA metals that are fully approved by the IRS. There's some nuances there of what can and cannot go into it. But again, we'll cover all that with you. We have access to all of it. It's very simple when you work with us. Is there a limit to how much gold I can own? There's no limits on this at all. Now, moving into a retirement account, we have a minimum. You have to have at least $10,000 in your account already to move into a self-directed IRA so that we can get that established with you. For most people, that's not a problem at all. They're obviously looking at doing more to get a real hedge, but that's the minimum. On the cash side, it's at least $5,000 to have us ship gold and silver out to you. But those are the minimums. There's no limit on the upper side. There's no government restrictions on this. We have people that put their entire accounts in. We do anything from, again, $5,000 or $10,000 on the IRA side up to $50 million. It just depends on what you have that you're looking at getting protected. So I hope that kind of gives you guys a sense of things. Robin says, if you're retiring at 58, working with the government, can you invest your TSP before 59 and a half? So that's a great question, Robin. And I've come across cases where that's been approved, especially with government jobs. They allow you to retire a little bit earlier, so you can actually move that retirement account earlier than what a typical employer-sponsored plan would do. That's not always the case. So if you have questions about this and you're thinking about gold and silver, I would recommend you call the number and let us source that out for you and see if that is something that we can do. Oftentimes it is. But we have to just double check for you, and we'll make sure that everything is good to go so there's no hiccups. Zan says, what are your fees and commissions that are taken out when precious metals are initially purchased? So yeah, great question. The full amount that you want to move over into precious metals is going to get invested into gold and silver at the market value. If you think of us kind of like a grocery store or a gas station, we work with all the major government mints. They lean on companies like American Hartford to bring their assets to you and I at the market value. So we as a company tend to get a bit of a discount. We turn around and just sell this gold and silver at whatever the market says they're going for. Now, it really doesn't matter where you buy gold and silver, if it's up the street or down the street or across the street, everybody should be fairly neck and neck at what they're selling the metals for, give or take $1 here or there. And the fees are already built in because we bought it cheaper and we just sell it at the market price. So there's nothing that gets taken out of your account. There shouldn't be any, commission fee above and beyond on that. You're just buying the metals at the market value. And again, the benefit of working with American Hartford is because we're the largest precious metals dealer, we tend to get a bit more of a discount, and we'll just try to pass that discount on to our clients and get you in cheaper than everybody else. Our whole goal here is to give you a good experience from start to finish. So I hope that helps. Now, if you guys have any other questions that come up as we go along, just go ahead and leave them in. But I just want to reconvene on why it's so important to own gold and silver right now. We talked at the start about how the economic outlook and risk factors are really causing Americans to move into precious metals as a hedge. But we'll just talk further about how inflation and currency devaluation can really affect a long-term retirement account. Everything that you're currently invested in right now is tied up in the US dollar. It's all priced in dollars. Right now, we're in one of the most critical times in American history as we printed over 40% of all US dollars in circulation within the last decade. That is, again, staggering. 40% of every dollar in circulation was printed within the last 10 years. Now, our government has become a money printing machine, where trillions of dollars used to be an unfathomable figure in recent memory. Now we have $40 trillion of government debt, and that number is growing daily. Every year, the government runs a $2 trillion deficit. That means that we spend $2 trillion more than what we take in with tax revenue. This year, it looks like we're on track for more like 3 or 4 trillion. Now, if we were a business, we'd be bankrupt. But as the government prints money and racks up debt, that purchasing power of the dollar continues to decline. And so too does confidence in the dollar system. And then the government has to issue bonds, which are just debt notes, but they put an interest payment on that bond attached to it to entice investors like you and I to take the risk in buying our government debt. But as debt mounts, again, $40 trillion, that confidence begins to decrease. And we see it across the board. Foreign investors and domestic investors are pulling back away from the U.S. bond system because, again, there's not confidence that we're going to repay our debt like we always have. And therefore, the government has to issue higher and higher interest rates on that debt to keep buyers coming. But that means that we owe more and more to service that outstanding debt. So if we owe 4 or 5% on $40 trillion, that's a huge burden. That requires us to then issue more debt to cover the debt we've already issued and that we need to service. And we're already paying $1 trillion per year just to service our U.S. debt right now. It's our second largest line item on the government's budget, second to defense spending only. Now, this cycle is called a debt doom loop, and it's how governments go broke, and it's how hyperinflation happens. Americans wake up month after month with their dollars purchasing less and less as inflation spending creeps up and the dollar devalues, right? So we see this old saying, how do you boil a frog? Very slowly. You have the frog in the pan. You just slowly turn the heat up and the frog's temperature goes with it and they don't realize that they're getting cooked. Otherwise, it would just jump out of the pan. But I'm telling you, it's probably a good time to jump. You and I are frogs in this system, and the government is just continuing to print, and the numbers that we thought were outrageous are now normalized. And you do that, you jump out of the pan by buying gold and silver, which are inversely related to the devaluing dollar. See, gold and silver are global assets. They're not just tied to the dollar, they're real wealth. And they act as a hedge against devaluation. And so if one country's currency goes down, this actually goes up against that because it's tied to the entire government or the entire global system. So it's a real hedge. It's not just a dollar-based asset like everything else that you and I own. Now, all of your stocks and bonds that are in your retirement accounts, they're only dollar-based assets, which means that you need to subtract the rate of devaluation from the return that you think you're getting. And when you do that, if you average 10% in the stock market, but devaluation is 5% or 11% like it was last year, then your returns are cut in half or they end up being negative because the dollar is losing more money, more value than what your returns have been in your traditional investments. So while investors think that they're safe in their long-term investments, the real purchasing power of that money is steadily decreasing. And that's why, contrasted against the dollar's 11% drop in value last year, which again was the worst year we've had in 52 years. Dollar drops 11%, gold rose 64%, and silver rose 142%. So does that make sense? In this world, the dollar is no longer king. And keep in mind that with inflation on the rise, newly minted Fed Chair Kevin Warsh is saying, if we can get inflation back to 2%, it would represent an 80% decline in the purchasing power of the dollar over the lifespan of the average American. What that means is that over your lifetime, you will see the dollar lose 80% of its purchasing power for you. That's just incredible. Meanwhile, this will go up. This will hold steady. This will be a hedge. 96% of central banks right now are buying gold. Nearly 20% of those banks are decreasing their exposure to the dollar, right? And the dollar is the only currency that they're actually decreasing their exposure to. The dollar is losing its position as a world reserve currency, and its purchasing power and prestige are going right along with it, and your assets are suffering. So even if your retirement account looks like it's been doing well, you have to factor in what is the real rate of devaluation that we're seeing right now. And so as we wrap up this webinar, I really appreciate you all being with us here. call the number right now, 866-607-2447, and we'll discuss getting started with you. It's more important now than ever before to have a real hedge against what we're seeing, where the dollar's headed, and actually protect your retirement account. So I just want to thank you for being here. If any of what I've said has resonated with you, if you're interested in buying gold and silver, give us a call. Actually take that next step and make a move to get yourself protected. The time is now. We'll have this conversation 6 months from now. It's going to be an entirely different economy and market and same old concerns and same old risks, and some of that has probably come to fruition. Meanwhile, gold and silver will steadily continue to go up as they've predicted to do. So I'm Machi Block with American Hartford Gold. Give us a call right now, 866-607-2447, and we'll discuss getting you an appropriate hedge in your retirement accounts or your cash investment. And again, thank you for joining us today.